Congratulations! Your loan is conditionally approved. A SunWest loan originator is always on top of her approvals, no matter where she is. Break free with Morgan.
Welcome to The Interest. I'm Mike Savino. Spring is in the air. Flowers are blooming, allergies are raging, and usually the housing market is buzzing. But the past year and a half have been anything but typical. So what can we expect for this spring buying season? NMP staff writer Sarah Woolach gives us a look.
So I don't really just see this horrible economic-driven decline in the housing market because of conditions that are occurring now.
Some experts remain worried that the housing market will continue to drop. Just last week, the MBA again lowered its prediction for mortgage origination this year. But Vero's chief economist Eric Fox says his model shows the housing market is done falling. He says things will remain flat this spring.
So I think we would correlate that with optimism in the market.
So what does that mean for home buying?
I do think we are moving more toward the 2018-2019 scenario than the 2020 or 2021 scenario.
That's because Fox thinks rates will stay where they are and home prices will continue to level off. Plus, a lot of buyers will remain active in the market. Older buyers will continue to take advantage of their financial situation.
Those folks, they don't, probably care about mortgage interest rates because they're just going to pay cash.
And millennials will make purchases as wages catch up to prices.
They're getting to be 30, 35 years old. They want to have their first house.
Of course, one thing that will keep the market in check is inventory. Fox says his model indicates most owners will opt to stay in their current homes.
The unwillingness of buyers to eliminate or to give up their 3% interest rate, I think, is the biggest variable on the table.
You can hear more from Fox on The Principal, NMP's news podcast, available wherever you get your podcasts. For The Interest, I'm Sarah Woolach.
Thanks, Sarah. And we continue to see our strong start to this spring with mortgage applications rising for the sixth time in 7 weeks. The bump comes despite mortgage rates ticking back up. The MBA's Market Composite Index rose by 3.7% last week with gains in both purchases and refis. And again, the MBA noted that mortgage rates are coming back up with the 30-year fix now at 6.55%. The 10-year Treasury note is creeping up, and that's what's pushing mortgage rates to their highest point in over a month. Even with applications trending up in recent weeks, mortgage activity is still 28% lower than it was this time last year. After the break, regulators are cracking down on AI-powered discrimination.
Tired of turndowns and wasting 25 basis points or more on slow and manual loan processing? Divorce your processor and break free with Morgan Chat AI. There are no bad deals or tough loans, only deserving families that need AI-driven fast and accurate service. We treat every client fairly and with empathy. AI that understands how you feel.
I am Morgan. I get you.
Welcome back. As the mortgage industry embraces artificial intelligence, regulators are urging caution. The CFPB and 3 other agencies say they're targeting bias powered by AI, and they say using artificial intelligence is not an excuse for breaking the law. The agency is partnering with the Justice Department, the FTC, and the Equal Employment Opportunity Commission to target discrimination caused by AI or other automated tools. FTC Chairwoman Lena Khan says that we already see how AI tools can turbocharge fraud and automate discrimination, and we won't hesitate to use the full scope of our legal authorities to protect Americans from these threats. This includes tools that result in redlining or that help power predatory lending practices. The CFPB is also cracking down on using AI that is too complex when evaluating a borrower's credit. The agency has also proposed a registry to track when mortgage companies and other financial institutions repeatedly violate laws. The registry would require companies to report court orders and agency rulings that go against them. Speaking of the CFPB, congressional Republicans have officially submitted their plan to overhaul the agency. U.S. Representative Andy Barr submitted his CFPB Transparency and Accountability Reform Act Monday. The Committee on Financial Services is scheduled to take up the bill during its meeting today. Barr's bill would dramatically remake the CFPB, starting with Congress directly funding the agency. Right now, the Bureau's budget goes through the Federal Reserve. Barr also wants to remove the director's position and put a commission in charge of the CFPB. Other proposals would require the CFPB to release more details justifying its decision. Even if Republicans can get the bill through the House, they'd need to win over the Democrat-led Senate and President Joe Biden. Coming up, how some borrowers are dealing with rising mortgage rates.
Network with more than 2,000 attendees in Irvine for the California Mortgage Expo, May 3rd and 4th. From San Diego to LA to San Francisco, no one does it like we do. Sign up now at camortgageexpo.com.
Welcome back. Here's what else is interesting today. Interest rates remain high and home buyers are looking for any way to save money, including buying mortgage points. A recent analysis of data by Zillow finds that nearly 45% of conventional primary home borrowers opted to purchase points in 2022 as a way to reduce their monthly payment. That's way up from 2021 when rates were at a historic low. And we saw the same thing with cash-out refis. 58% of these borrowers purchased points compared with 48% from the prior year. For more on these and all of today's top stories, go to nationalmortgageprofessional.com.